You are welcome to Remit Trade Academy. My name is Paradise and I will be bringing you this cryptocurrency video. In today's video, I'll be showing you how to use this simple trading strategy to make $100 per day. Watch the video till the end. If you are new to this channel or you've not subscribed, please help subscribe to the channel, hit that like button and don't forget to turn on the bell notification so that you will receive updates like this every single day. Check the channel for other educational content. Leave a like and share this video. I'm going to show you how to use this strategy to make $100 per day, and we are going to use two indicators. So the first indicator we are going to use is the super trend indicator. So you go to the indicator section right here and search for the super trend indicator. So right here, the super trend indicator, we'll click on it, and the super trend indicator is on our chart. So what the super trend indicator does is that it shows us when the market is in an uptrend and when the market is in a downtrend. So when the market is in an uptrend, we see this very area color green right here, and the market is moving up. And when the market is in a downtrend, we see this area that color red at this area or pink, and the market is moving to the downside. And another indicator that we're going to use for our entry and confirmation is the stochastic RSI. So if I go to the indicator section and I search for the stochastic RSI right at this area, you see it here, I click on it, and the stochastic RSI is on my chart at this very area. So the stochastic RSI work in this very way. So from the 80% line above is the overbought condition, while from 20% downward is oversold condition. So that means anytime market enter into overbought condition, we are expecting the market to come back right down. And also when the market enter into oversold condition, we are expecting the market to go back right up. So in this strategy, I am going to show you how to use it very well with accurate entries, stop loss, and take profit targets for $100 per day with this strategy. You can use this strategy both on spots and futures. Just like you can see right here, market move to the upside, then come back right down. At this very point, we've already seen that the super trend indicator is indicating that the market is already in an uptrend. And we from this area on the stochastic, the market is already at overbought condition. So for a buy signal, we want to buy the market when the stochastic is at oversold condition only. Okay, so you are only taking a buy position or a long position when the stochastic is at oversold condition, and the super trend indicator is indicating that the market is in an uptrend. So at this very area, we see that the super trend indicator is already in an uptrend, but at this very point, the stochastic indicator is at overbought condition. That means market is going to come back down. So we are going to wait for market to come back down and enter into oversold condition. So when market enter into oversold condition at this very area, that is when we want to enter a long position or a buy. At this very area, we want to see a crossover between the blue line and the pink line at this very area, crossing above the 20% mark on the stochastic before we enter our trade. And we see this confirmation happen on this very candle right here. So this is the very point we want to execute our trade for our entry for market to move to the upside. So at this very area, we want to use this very tool right here, that is the long position tool. So if I take the long position tool and put it right at this very area, for this strategy, use 2% stop loss. So if I want to use 2% stop loss here, I have to move my risks upward a little bit to 2% level at this very area. So if my stop loss is at 2% at this very point, then that means I am going to increase my reward to 4%. So I am looking for 1 to 2 risks reward ratio. So for this strategy, you also have to look for 1 to 2 risks reward ratio. That means if I am risking 2% for my stop loss from my entry to this very area, then that also means I am going to look for 4% to the upside. So I am going to move this to the upside upside a little bit. If I have 2% risks and I have 4% reward, then that means I am using 1 to 2 risk reward ratio. You have to monitor your risk management very well, but this is what works very well for this strategy. So this is our first entry, and you see the market hit our target. So with this, even before the market enter into overbought condition about coming out of it, you have already exited the market with your profit. So this is our first entry in our first trade. So let's look at another one again with this same strategy. If you look at it at this area, market to move up and then come back down again. Remember, we are entering the market only when the market is at oversold condition on the stochastic, and the super trend indicator is showing that market is on the uptrend. So at this very area right here, market is still in an uptrend, and right at this point, the stochastic enter into oversold condition and move out of the oversold condition at this very point. So this should be our entry point. So if I take this very 2 and I mark out this very area as our entry position, and I'm using 2%, that means from this very area upward a little bit to this very point will give me 2% approximately, and my take profit target should be a little bit to the upside to 4% at this very point. So this will be my take profit target, and this will be my entry, and this will be my stop loss. If you look at it before the market move to the upside to this very area, I have already collected my profit for this strategy. So this strategy work very well for a day trading on the 1 hour chart. For a short position, if you look at it very well, from this area to the downside, the market is in a downtrend, showing that the market is in the pink zone at this very area. So what we want to do to enter a short position on futures is we only want to take trade when the stochastic is at overbought condition. So this could have been a nice place to trigger a short position, a nice place to trigger a short position in this strategy. When you enter your trade when the stochastic is at overbought condition, it will be very difficult for the market to move up again 2% or 3 above. So with this, you are setting appropriate stop loss and as well managing your risks very well. So let's say you are taking a short position with this very move to the downside, and you come right there and pick this short position at this very area. So with this short position and market is at overbought condition, with this candlestick, after the formation of this candlestick, and you want to enter a trade. So from this area right here, you expect the market to come back right down so that you collect profit at 4%. So if market go below up to 4% at this very point, you want to collect your profit approximately, and your stop loss is at 2% at this very point. From this strategy, you will not be stopped out easily just like that after you take a trade with a 2% stop loss at this very zone at this very point. So after the formation of this candle, or upon the close of this candle, remember the stochastic is already at overbought condition. So you take a trade for market to go back right down. Market can be within this very area a little bit in some case before it will actually come back to the downside. That also means if you do not take a trade here, this is another opportunity to take an entry, and this is another opportunity to take another entry at this very area. So with this, you should make your profit as market go back down into this very area with this risk reward ratio, with your stop loss at 2% from your entry point and your take profit at 4% from your entry point to the downside for a short position. Another entry here is at this very point as well, or from this very area. So if we use this very area, that is this very candle, so let's say at the close of this very candle at this very point, we want to enter a trade. Reason because we are in a downtrend with the super trend indicator showing us that, and also we are already at overbought condition on the stochastic RSI indicator. So from this point, market go down, so we want to enter a trade after the formation of this candlestick to the downside. If we use this very tool from this very area for a short position to the downside from here, then we want to use 2% stop loss. So at this point it's about 2% stop loss. So from here to this very point give us our 4% take profit target at this very point approximately. So from here you take a trade, your stop loss here, and markets go back down for this very area. You see it, market hits your target. So if you use this strategy accurately, just like I have said, it is going to give you a high probability entry for your entry, your stop loss, and your take profit target. Now, one thing very important I want to talk about in this strategy is this very area. This strategy does not work when the market is ranging. So if you look at it very well at this very area, you see the market is moving up and down, and the super trend indicator is showing you uptrend, downtrend here, uptrend, downtrend here. So don't use this strategy in a ranging market. It's only suitable for when the market is in an uptrend or downtrend. And let me show you something that will blow your mind here, guys. If you use this strategy on the 4-hour chart or 1-day chart for a swing trade, so let's say we change this time frame to 4-hour time frame, and you want to take a trade with this very strategy, you see that you could have been in a massive move from the downside. We also want to enter a trade from the overbought condition for a short position. So if you look at it very well with the 1-day chart or the 4-hour chart, just you can see it right here, and if you take a trade when the market is already going down, from this very area the super trend indicator is showing us that market is going to go right down, and from this very area we see that the market is already at overbought condition on this very chart. And after the formation of this candle, that is when we want to enter a trade, because we want to see a candle confirmation heading downward. So after the close of that candle with the stochastic at overbought condition, we want to take a trade at this very point. Now when you increase your time frame to 4-hour or 1 day, then it's advisable you increase your percentage risks. That means if you were taking 2% on the 1-hour chart, then on the 4-hour chart you should be taking 3% risks. Then that also means your take profit target should be 6%. So at this very area, if you use this for a short position at this very point and you put your entry at this very area and your stop loss is a little bit to the downside with a 3% risk, after the formation of this very bearish candlestick right there, and your take profit is at 6% at this very point approximately. So with this you will see that you will also make lots of profit from this very point to the downside on a swing trade. Aside this, you can use this to ride massive trend to the downside or to the upside on a swing trading strategy. One thing very important I want to talk about is you have to backtest this strategy to see whether it works best for you for your trading. If you find this video useful, please help subscribe to this channel. Don't forget to leave a like and turn on the notification bell so that you receive updates like this every single day. Thank you very much for watching today's video, and I will see you in the next video.